All right, welcome back for the episode of Carnivore Trades. Today is Tuesday, May 9th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So, about as much of a nothing burger as you can possibly have. Pretty much same as yesterday, although markets here down 40 basis points, getting a little bit of slippage here in the final 5 minutes. NASDAQ down a little bit more here, down just about 2/3% there. Dow basically flat, and the Russell gapped down, but had a nice recovery there, although still a laggard there overall, and still not a very good pattern there on the daily time frame, or weekly or monthly for that matter. Semiconductors kind of dragging tech down here, down 1.5% there on the SMH. Really, the market's just kind of in a holding pattern right now. We're obviously waiting for CPI tomorrow, and we'll see what we get here. The last couple of CPIs have been kind of nothing burgers for the most part here. We'll see what we get tomorrow. Again, this market just desperately needs a catalyst of some sort to really get us into either direction. And for me, like I've been kind of, talking about lately, I think the bulls I think the clock's ticking on them to get this rally going. You had a really nice surge, 2 weeks ago, and no follow through, and it gave it all back here. And now, I mean, if you put in a lower high, that's where this gets interesting here, and you're going to go attack that 404 area again. And if we do, that's going to break this time. To me, it's like I said yesterday, it's very reminiscent of this run up in November, December. We had that big move, it got faded in 4 days. We had a big move, it got faded in 4 days. And then we gapped up. I believe this was CPI. It may not. If it wasn't CPI, it was some sort of Fed day or something like that. And we had a gap and crap. So maybe that's possible here. Again, we could get up to that 420 area. I'm just not sure it's going to happen here. I just feel like they had enough of a chance to break us out. And you look at what the Fed's doing. Everybody's been talking about, they're pouring liquidity in the system. They're pouring liquidity in the system. This is actually from last week, but their balance sheet's declining again, and has been for 6 weeks now, going on 7. If you're wondering why we can't break out, that's probably it there. This doesn't mean we can't have some type of blow-off move. We get a catalyst or something like that, but I just feel like this consolidation's really long in the tooth, right? I said this yesterday. We had 3 weeks here, and that failed. So this is all we're really going up against. We've had 7 weeks in this range. If things are so bullish, like I'm being told they are, why can't we break out? Also, earnings are out of the way. So what's left for the market to really rally on? That's really kind of the way I see it right now. But again, stocks are holding up for now. At least 4 or 5 of them are, and that's keeping the SPY and that's keeping the indices higher here. But as we've kind of mentioned again over the last several days, equal weight is very poor. And much lower than the February highs relative to everything else here. So we'll see what CPI does tomorrow. Market wants a Goldilocks print. Anything too hot, too cold is going to be no bueno here. Getting a little bit more of a dip here in the final couple minutes. I'm seeing XLE come in pretty sharply. Seeing some tech names come down. I don't know if we can make too much out of it here. Somebody's going to say the CPI is leaked. I guarantee it, but I don't think that's happening here. If it was leaked, they wouldn't have waited this long to sell it. But either way, again, it's really all about that number tomorrow, and we'll see what we get. Again, market wants the Goldilocks print, doesn't want anything too cold. That's going to, remember, market is now worried about recession more than it is about rate hikes. But, a number that's too high would obviously be a surprise as well. But obviously, you get what I'm saying. Anyways, let's get over here to the triple Qs. Spiders here. Losing that 20-day moving average, so in a little bit weaker of a technical position. Again, triple Qs, one more move up could get us into this trend line here and right into that red bar. There's also a gap at 329. So that's really all I see for it at the moment. I think the composite, though, if we're looking at the composite, this can actually get up to about 12.4. So that has a little bit more upside. I just don't see really that much more for the Qs, but the composite looks a little bit better. I know I don't cover it all that often, but just for what it's worth, that looks a little bit better to me. Again, the Qs here, I know I don't use RSI all that much, but You have declining RSI with a rising wedge. It's usually not a good sign. But the composite does have a much better pattern as markets close here, as it's more kind of like an ascending triangle there. So I like that up to about 12,400 there, if it can get there. But anyways, Russell 2000, and touched on that earlier, just bad all around here. Weak pattern here. We had that breakdown a few weeks ago, and this is consolidating below the moving averages. It's telling us it wants to go lower here. So big bearish inside bar on the weekly. Not a good setup here moving forward. A lot of regional banks there in the Russell. And really the only positive for the KRE right now is it's holding the lows. And that's really it. So I don't like the KRE, don't like the KBE, and I definitely do not like the Russell. The Dow hanging in there okay, down 13 basis points. We won't make too much out of it. The pattern's not great here. You can make a case you have kind of a diamond as well, in addition to the SPY. So there's your kind of diamond, and you put in a lower high, this will go down and test this 200 moving average as well as this upsloping trend line. So anyways, let's get over here to rates. Let's do bonds, or let's do the semis first. So SMH, again, we broke this trend line, still struggling with these moving averages. I don't like what the semis are doing. It's really just NVIDIA holding up the whole SMH. I also think we should be paying attention to TSM pretty much every day now. If this starts to sell off for no reason on news, it's going to be a huge negative. And you can even make a case there is a kind of a bear flag here on the daily right now. So be watching the TSM there. It's a very, very, very important name right now. But semi's under pressure there. IGV here. Again, got a bid, actually green in a down tape, so that's a small positive here, up 32 basis points, still below that 20-day moving average. Again, the weekly pattern is still okay, but again, I still think this is going to need help from the market if it's going to, get back above 300, and then maybe you can challenge the highs one more time. But that's really all I'm seeing for cloud software. Dow Transports, a little bit of a doji there that came off the highs in the last 10 minutes. Again, you're still inside of this big down move, so really not a good setup here. You really need to get back above this trend line, and if you can do that, then you can get to 14.6 here in the short term. But again, just not good looks here. Transport's leading, put it with lower highs, semis lower highs, equal weight lower highs. What's really this market? What's really the rally here? It's really just 4 or 5 stocks. So, all right, now over to bonds here. So ZT coming off the highs, nothing crazy there, just basically flat to lower. ZN and ZB, same story again. Bonds still in a holding pattern. Nothing terrible right now, but rates are, I don't see a lot of downside in interest rates here, even if they do head lower. But for right now, they're just stuck in a holding pattern. Let's get over to the home builders here. Of course, XHB was green, even though the market was red. I want to read you guys some stuff here. I know you guys in the comments talk about home builders a little bit with me, but I have some of my members today. We were discussing home builders in our forum, and I've been on the thing that here they're rallying right now. I think they're squeezing. Just look at Pulte Homes, right? That's a squeeze. That's vertical. It's parabolic. It actually did come negative in the last 10 minutes. So you see KB Homes coming off the highs. Toll Brothers. Lennar. So these names are just really overbought. I think everybody had the same idea, right? We know rates are going up. We know we're going into a recession as well. So what sector do you short? Obviously, this one's a no-brainer here, and they're just getting squeezed out. Why are their numbers still so good? These contracts are still, they're still kind of getting through the last of literally like record margins, 0% interest. They had really good conditions. Moving forward, though, it's not going to be the same. I'm just going to read you comments here. So this is from one of my members. I've been building high-end custom homes for 18 years, and construction is slowing. Everyone is busy right now due to work that was contracted last year still being built, but new inquiries have slowed dramatically. I realize a small business in central Missouri is tiny sample size, but I can sense that something has changed. Feels just like 2008 did back when I was too young, naive to see it. Won't be making that mistake again. Also, the old contracts were very lucrative. Our margins have never been higher than they were post-COVID. It was like you could literally name your price as long as you could fit the project into your schedule. No one seemed to care what it cost. People had money to spend and were extremely impatient. Again, this is the kind of thing we're seeing here. We had those really good, favorable conditions, but it's starting to roll over here. Let's read this one here. This is from a totally different person. One of my clients is the VP for a custom home builder here in North Carolina. She said they made no new sales for the month of April, first time in the history of the company. So these things are starting to turn around here. But again, when you have squeezing, they can go higher. But I'm telling you, these guys are going to take the elevator down once they finally tap out. But just wanted to touch on that a little bit there, because I know we've talked about this a lot in the comments, and I think a lot of you guys agree with me here. But that's the kind of conditions, and again, the rate hikes have a lag, and that's why everybody's out there like, oh, well, we're not going to recession. We're not going to recession. Where's the recession? They have a lag, and it'll happen probably all at once, and that's, or at least the market will worry about it all at once. That's just the way it does. Climbs the wall of worry here. But for now, home builders continuing to defy gravity, and they're the new Nvidia here. So VNQ in a holding pattern. I don't like this at all. XLF here down 37 basis points below the moving averages. Financials are still weak. We already talked about KRE, KBE. Broker dealers actually green today, so that held up okay. If this can consolidate a little bit, you can maybe get back up to 450, but I just don't like really anything in the financial space right now. Crude here up 0.5%. I like this for a move to 75 to 76. It's holding up really well, got a nice bounce, and it should continue higher. After that, I don't see a ton of upside though. XLE backed off a little bit, like I said, towards the end of the day, but managed to scratch out a small gain in a down tape. We'll give it the benefit of the doubt. OIH and XOP, well, XOP down 0.5%, OIH up almost 0.5%. So hanging in there, okay, those levels are still the same. We'll still look, I would say at this point, that 20 moving average is probably gonna be resistance for the OIH, definitely on the weaker side, and then 125. We'll say the 50 MA for XOP, but if it gets up there, but either way, they came off the lows the last couple of days. Nat gas had a nice pop here, up 1.39% currently, so nice pop off the lows there. After giving a lot back last week, two things with nat gas. Right now, there are wildfires going on in Canada, and that is causing production to be slowed down. So that's a huge relief for prices, as producers haven't done that. But now they're being forced to here in Canada, which is, big area. Also, after this little pivot here, last Friday and into today, I think it's fair to say, especially if you get above that 50 moving average, this is a higher low. That's the first time since December. So a little bit of a trend change here, changing character. And if you create a higher high, well, then you have, a confirmed higher lows and higher highs. So a little bit of a, changing character there. They did take it down like they always do in the morning, and then it actually came off the lows. So a little bit of a change there, but also now some headlines starting to turn around there. And also, I just read Farmer's Almanac predicting an extremely hot summer. So we'll see if that gets it going. Like I've been saying, it's all that everybody's going to talk about the BCF and everything. You don't buy it when the numbers are coming down. You buy it before while it's cheap. And that's really what I see happening. But to me, this is just all a big accumulation pattern. Anyways, let's get over to the dollar index here, up 0.5%. Let's not make much out of it. It's hanging in there with that 20 MA. I still think it needs to go test 100. So nothing's really changed there. Gold still in a holding pattern as well. Nothing going on there. Still overbought on the bigger time frames, as is silver, but they're holding up really well. I can't take anything away from it. Platinum, rock star stuff, up 2.5% here today. So instead of 1040 holds, it's got a nice pop to at least 1100, and it got through that. So I like this pattern here on platinum. Let's look at palladium. Another bid here today. Again, I love this level. I like this area for palladium here on the bigger time frames, as I talked about yesterday. Big 618, 100-month moving average, back testing a breakout area. A lot of things to like about that. Copper is still in a holding pattern, bearish inside bar on the daily for a setup to 375. All right, and then let's go to Bitcoin here. So Bitcoin a little bit on the softer side, nothing terrible though. But again, we'll watch this. If this triggers, that's a head and shoulder top, and that, I can't remember where I put that target, but we can do that again here. We'll just do that real fast. So that would be your target if it breaks. Again, that's about 23,200, and there's good support there, right? So there's good chart support right in that area. Again, we also have the 200 moving average up sloping in that vicinity. So if that pattern works out, that would line up pretty well. But again, this is all speculative until it actually breaks and we get a close below that. Otherwise, it could have one more pop up, but that's really all I'm seeing for Bitcoin right now. Okay, yeah, so that's really it here. Again, nothing burger. Market came in a little bit towards the end of the day. I wouldn't make much out of that. It's all about the CPI reaction tomorrow, and hopefully that gives us some direction here. So we've been stuck in a range for 7 weeks now. Anyways, guys, going to wrap up here. Take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.